How's it going, guys? This is Cryptobud. Today I'm going to talk a little bit about what happened today in the crypto market. You probably attended my live stream, so I want to thank you for watching that video. And if you haven't watched it, it's right there. It's about an hour long. It went into some of the interesting things happening with this market, specifically as we're breaking this monumental 20K level. Now, you're probably going to be doing a couple of things. You're probably going to be looking online to see if maybe this is the top or is this a good time to buy? What are people actually saying about Bitcoin? And what I'm going to tell you is my specific reasons for why I think they're going to be wrong here. Um, if you go on social media and you go through any platform right now, everybody's going to be talking about buying the dip, that there is going to be a correction coming because this rally is just way too much in a very short period of time. And what I'm here to tell you is that they could be mistaking it in this very respect. You see, the way the market works is that it does not always do what people think it will do. And this is something that a lot of people miss out because the narrative has always been that whenever we have blow off tops like these, that they are going to eventually give a correction. And that has happened in the past. In 2017, we saw a massive run up to 20K, which is an all-time high. And all of a sudden, we fell right back down. And then at that point, we started that bear market in early 2018. Now, I'm not going to tell you that market psychology it's a very weird thing. What it does is that it actually tricks people into thinking that certain things are going to happen when in reality it's going to actually do the opposite. And I'm not exactly sure as far as the logical reason for it, but I do know that it exists. So anyway, so 2017 was a very interesting year. We hit 20K, and what had happened was everybody was FOMOing in at 20. In fact, Coinbase had went down, and many of these exchanges could not handle the volume because the people were just kind of buying in. And all of a sudden, out of nowhere, there was a massive red candle. This red candle completely sold off, and then it started a cascading effect that eventually broke Bitcoin's all-time high. This has happened already in the past. Now, there's one key difference, and I don't want to say this is different this time because generally speaking, sometimes it does happen, is the fact that this time around, we're not getting the retail investor. In fact, you're not seeing a lot of people getting into Bitcoin even at this price, which tells me that this rally that we've been getting for the last couple of months is really institution driven. Now, let me clarify what an institution is. An institution is someone who has millions of dollars at their disposal and are purchasing Bitcoin on a set program. They're not buying it all in one day. They're not buying it in increments. They're buying it in batches. In other words, they're not buying daily. They're not averaging in. They're just kind of buying as they have capital. And so what you're really seeing right now is the effect of that already happening. The order books already are extremely thin, which means that anybody who wanted to sell to them at 20K has already done so. And the people who are remaining, who are left selling, are the people who are probably going to take profits. But the original sellers who wanted to break even, or people who were underwater at some point and just wanted to get out, are probably have already sold to them. So what that has established is a new set of buyers at 20K. And what really ends up happening is that because you've established a new set of buyers, now you're going to end up having the fuel to continue going higher because anybody who's sold now has to be forced to buy back in at a higher price. Now, I'm not saying we're not going to go down, and I'm not saying that this is going to be the bottom, or we're not going to drop at any point. There's no way of knowing that. But what I do know, though, is the psychology has changed. Now, here's a couple of pieces of evidence just to kind of illustrate that point. For the last couple of weeks, we've been having an influx of institutions who have committed to purchasing $1 million worth of Bitcoin. Now, we're not talking about $1,000 of Bitcoin back in 2017. We're not talking about Uncle Joe or Aunt Sarah purchasing $10 at Bitcoin. We're talking about someone like MicroStrategy purchasing several $1 million worth of Bitcoin within a very short period of time. In addition to that, we're also talking about PayPal, who has now integrated that into their banking system. So they have been buying since 2018. In fact, they just recently published that today because they wanted the public to know, but we don't know their exact buy points. You see, they could have been buying for months and months and months ago, and they didn't really have to disclose that. In the stock market, it's a little different because stock market, you have to disclose when you're going to be purchasing stock. And even then, it's delayed. So what I'm trying to say is that there is a possibility that these institutions have already purchased. And they're just basically telling you that they've bought. They could be buying at 10K. And they just announce that they have X amount of money. Now, some of them actually do tell you when they buy it. But the point being is that if the institutions were here early, there's two things that can usually happen. One is that they're going to sell it at some point to realize their gains. Two, there could be selling some of it in increments to, again, to realize their gain. Or three, they're going to hold it and continue to purchase in different increments. Now, let's talk about the first scenario. Why would an institution want to sell their tokens? Well, first off is if they realize a very large profit. So if you take a look at when the purchases were made, and we go back to March, I don't think any institution was purchasing Bitcoin at that time. I think that was more people who were pretty much trying to grab some Bitcoins for their own accounts. But what had happened as the economy began to recover and there was more cash coming into these companies, they were left with a lot of cash. And that came in sometime around April, May, when all the PPE money, everything started to kick in. Many of these companies, in addition to that, were able to purchase cheap money off the bond market sometime also in the summer. So if you kind of look back at the actual data tracks and what happened with the stock market at that time, you saw that a lot of the companies did have extra cash to kind of throw around. Now, let's forward the tape a little bit. The institutions right now are currently sitting very well. Whether they bought Bitcoin at 10K, 11K, they've basically doubled their money. So whatever money they had put in, now it's worth 100%. If they bought at 10K, if they bought less than that, they're probably worth 3 or 4x. At some point, what's going to happen is they will be taking profits. Now, this is where it gets a little tricky because since we don't have retail just yet, institutions are going to basically be selling to themselves. So in other words, if I made 100%, I have to find another buyer to unload that same amount. The problem here is that many of the institutions are not going to want to buy if everybody's selling. Okay, so in other words, if one person's unloading $100 million worth of Bitcoin and another one is also unloading 100, the other person is not going to buy that. So what they're going to need is retail to come in to absorb the rest. Now, this is where it gets really interesting because this is exactly what happens usually during the stock market and also during a lot of these other larger asset classes, is that the institutions cannot sell to themselves or to each other because of the fact that they'll kill the market in the process. They might as well just do an OTC trade, which means an over-the-counter trade, where it doesn't really affect the price, because then they can also sell and crash the price in the process because they're just so large. So what happened in 17 was something very similar, but it was a lot more obvious. And the reason is because retail, once they leave, they don't really care at what price they sell it at. What they'll do is they'll just sell just so that they stop losing money. Institutions don't sell that way. The way they sell is that because they want to raise cash. Now, there's a couple of tailwinds going for this. Number one is that there's going to be a lot of cheap money coming in the next couple of months because the Fed just announced that they're going to continue to purchase bonds in the open market. Second thing is financing is going to be very cheap. So there's really no need for an institution or a company to sell at this moment because cash is extremely cheap. Where I do see the problem, though, is when you have a situation where cash becomes very expensive, and then the institutions are going to have to be able to raise cash to be able to pay their operations or to diversify their holdings. Now, I'll tell you this right now. Institutions are not in the business of trading. If they were, they would pretty much be gambling with their investors' money. However, what they will do, though, is they will raise cash to run their business. And if they need more cash to purchase goods or move into or buy more stock or do other things, then what they're going to do there is they're going to start liquidating their holdings. Now, this is all on the premise that we are in the institutional level. Okay, now there is going to be a third component to this, which is, will retail come? And this is where you got to be very careful, because once retail comes, then these institutions now have a large base of which they can sell. At that point, retail is going to have to absorb that. Otherwise, institutions will not be able to exit out of their positions. So how does this all fit in the overall picture? What you're going to start hearing in the next couple of months is that retail is not going to want to get in. Okay, and the reason is simple, is because they've been burned a lot. But as the price rises and rises and rises, they're going to start changing their mind, because the old price, which is now the support level, is going to be so far off that they're going to be forced to come in and purchase those. So in other words, you're kind of front running a lot of these retail trades are going to come in, and you're also front running a lot of the institutions that have not arrived just yet. Now, we've already heard from a handful of companies that have purchased Bitcoin. These are the ones that have made it public. There are others that probably have not. So if you kind of add 2 and 2 together, really what we have is potentially more than half of the institutions already purchased Bitcoin or purchasing Bitcoin in the near future, while we have another half that already have. So we're kind of like, if you take a look at the inning, in baseball, like we got 9 innings, we're pretty much about 4th or 5th inning in. We still have about a couple more innings left in which retail can continue to come in and pick up the rest of the slack. Now, it remains to be seen whether this is going to last. We already know that in crypto, things don't really last forever. That's just part of the industry. But what we do know, though, is that if you're early enough, you're going to be able to capitalize on these trends much in a better spot than people who are coming in a little late. And that could be a month, that could be 2 months, that could be next week, that could be 3 weeks. We don't know. So waiting for that top or waiting for that bottom or waiting for this and waiting for that is just really just over analyzing the situation. The key message here, guys, is that there is FOMO buying going on. The breakout that we saw at 20K is symbolic in 2 ways. Number one, it's a rejection of the old high, which means that old high is no longer going to be a high. Second thing, what it does confirm is that we do have legitimate buyers coming in. So it's not CME. It's not really people trying to gamble. It's really people hoarding Bitcoin and holding that price. And that's why we did not see the price decline in the last couple of days, although we should have done it. And for some odd reason, everybody just came in and decided to break, 20K off the lid. Now, this is going to also create a situation where Bitcoin is going to be more publicized than ever before, because in the history of Bitcoin, we have never broke 20K, which means that it took 3 years for Bitcoin to break 20. If you take a look at the last bull market that we had in 17, that took a couple of years to break. And then previously from that was also took a couple of years. So everything is kind of working lock in step as far as maintaining the momentum on the longer term time periods. That Bitcoin just continuously breaks all-time highs. And 20K is a very critical number for a couple of reasons. Number one, if you take a look at the market cap for Bitcoin, it's already approaching many of the companies like banks that we actually have currently in the US. There are close to $400, $500 billion. Bitcoin is just knocking on that $500 billion market cap. Bitcoin breaks 500 billion, it's going to be a lot easier to move to the $1 trillion mark versus when Bitcoin was at 10 billion or 30 billion. At that time, people didn't really take it seriously. It's kind of like Ethereum. Nobody really takes it seriously until it starts getting into the $100, $200 billion mark. Then people are going to start saying, okay, I think this is going to be a legitimate issue. So the bottom line is that if Bitcoin continues to run and it continues to break all-time highs from this point, its market cap is just going to expand, which is going to give it a lot more legitimacy in the space compared to the other tokens. And what that's going to do is that it's going to show to the public and to institutions that this is something worth holding. The confidence in crypto is more important than the actual token itself. The technology, we already know, can be used in many different ways, but the branding and the actual legitimacy of the project is much more important in many cases than the tech. So Bitcoin breaks $500, $600 billion. Once it does that, once it can do that, it's going to pretty much be blue skies all the way to 1 trillion. Once it reaches 1 trillion, then that's where Bitcoin is going to cement itself as a viable currency in the eyes of the public. By that time, it's going to be already too late. Institutions have already dominated the entire space. And I believe that they are pretty much there. They just need that extra couple more institutions, banks to kind of come in. And at that point, we're pretty much at 1 trillion at some point. Now, where does that leave you and me? Well, that leaves us with just either you're going to be a spectator or you're going to be a participant in that ride to the top. Personally, I'm not really going anywhere. I think Bitcoin has come from a very, very humble beginnings since 2009. I've been tracking it since 2009, 2010 with a very large investment of my time and energy into this project. And now we're starting to see some of the fruits of this labor. I did not develop Bitcoin, obviously. I did not participate in the actual technical piece of it, but I was there for, I'd say the teenage years of Bitcoin, and now we're reaching adulthood. So I think it's really interesting to see, and I hope that you guys join me in this journey as we continue to march forward into a new chapter in Bitcoin's history, which is pretty much the adoption, the legitimacy, and more importantly, the recognition that this is a viable technology that is going to revolutionize the way we actually do money in the future. And although right now it's not easy to see, the time will come when Bitcoin is going to be as ubiquitous as any sort of currency out in the real world. We've already starting to see that right now, but we need more mainstream adoption to really push that. Now, if Square and PayPal are not an indication of adoption, I don't know what is. But all I know is that we've come a long way from holding wallets in Mt. Gox to now PayPal holding Bitcoin for you to purchase for anybody. All right. Well, if you like this video, let me know. Go ahead, press like and subscribe, and I will see you guys next time. CB out.